For years, something big has been building quietly in the background of the global financial system. Not in headlines, not on primetime news, but inside official reports that almost nobody reads. Right now, two of the world's most powerful countries have been making moves that should make everyone pause: China, Russia. Both have been doing the same thing, at the same time, on a massive scale. They've been reducing their exposure to US dollar assets at a speed we've never seen before. Let's start with the data. Every month, the US Treasury releases a public report called Treasury International Capital Data. It tracks exactly how much US government debt foreign countries hold. No opinions, no theories, just numbers. According to the most recent figures, China currently holds roughly $775 billion in US Treasury securities. That sounds huge until you look at where they were just over a decade ago. In 2013, China held more than $1.3 trillion in US Treasuries. That means over $500 billion has been quietly reduced. And here's the key detail most people miss. This reduction is not slowing down. It's speeding up. In just the last few years alone, China has sold hundreds of billions more. Russia's move was even more dramatic. Before 2018, Russia held close to $100 billion in US government debt. Today, that number is almost zero. More than 95% of their position is gone. That's not gradual adjustment. That's a full exit. Now, if only one country had done this, you could blame politics, sanctions, trade disputes, diplomatic tension. But when two major global powers make the same decision at the same time, something else is happening. And here's where the trail leads. While they were selling dollar-based assets, they were aggressively buying something else. Gold. Not paper gold, not ETFs. Physical gold. Russia added hundreds of tons to its official reserves over recent years. China officially reported significant purchases as well. And many analysts believe China's real gold holdings are far higher than what appears on public balance sheets, due to how reporting rules work. So let's be clear about what this means. Hundreds of billions were moved out of US government debt and redirected into an asset that carries no counterparty risk. That's not a normal portfolio adjustment. That's preparation. So why now? The answer sits inside the US government's own balance sheet. As of late 2025, US national debt has crossed $36 trillion, and it keeps rising at a pace of roughly $1 trillion every few months. But the debt itself isn't the real danger. The interest is. Annual interest payments have now crossed $1 trillion per year. That's more than entire federal programs combined. This creates a trap. If interest rates rise, the government's interest bill explodes even faster. If interest rates fall too much, inflation accelerates and erodes the currency. There is no painless option. This is what economists call a debt spiral. And foreign governments can read the same math. That's why this matters beyond headlines. When major foreign holders reduce their participation, the US Treasury still has to refinance trillions of dollars every year. If international buyers step back, the burden shifts inward. Banks, pension funds, insurance companies, and increasingly, the central bank itself. History shows that when a country becomes the primary buyer of its own debt, currency pressure follows. Now zoom out even further. It's not just about selling treasuries, it's about building alternatives. China didn't stop at buying gold, they built infrastructure. The Shanghai Gold Exchange has grown into the world's largest physical gold trading hub. They developed alternative payment systems designed to function without the traditional dollar-based networks. Russia did the same. These systems aren't experimental anymore. They are live. They are processing real transactions. At the same time, global alliances are shifting. Large emerging economies are increasing trade in local currencies. Energy transactions are beginning to settle outside the dollar framework. This doesn't mean the dollar disappears overnight. Reserve currencies don't collapse suddenly. They erode, slowly at first, then all at once. History gives us a clear example. The British pound once dominated global finance. Within a few decades, it lost that status as confidence faded and alternatives emerged. The transition didn't happen smoothly. It accelerated once a tipping point was reached. And that brings us to gold again. Central banks around the world have been buying gold at the fastest pace in decades. This isn't speculation, it's insurance. Gold plays a unique role during periods of monetary uncertainty because it isn't tied to any government yes promise. And supply is limited. Global gold production grows slowly, while demand from institutions continues to rise. Basic economics tells us what happens when demand rises faster than supply. Prices adjust upward. This doesn't mean predictions are guaranteed. It means the direction of risk is becoming clearer. Here's the most important takeaway. Governments and central banks don't act emotionally. They move based on long-term calculations. When you see coordinated shifts away from debt and toward hard assets, it signals concern about future stability. That doesn't mean collapse tomorrow, but it does mean the current system is under strain. The people who move first protect themselves early. The people who wait react later, usually at a higher cost. So don't focus on headlines. Watch actions, because actions reveal priorities. And right now, the actions suggest the global financial system is entering a period of major transition. The next few years will reshape how money, trade, and value are defined. The only real question is whether you're repaying attention before the shift becomes obvious to everyone else.
Hello, my dear friends. How are you? For years, something big has been building quietly in the background of the global financial system. Not in headlines, not on prime time news, but inside official reports that almost nobody reads right now. Two of the world's most powerful countries haven't been ranking moves that should make everyone pause. China, Russia, both have been doing the same thing at the same time on a massive scale. They've been reducing their exposure to US dollar assessed at a speed we've never seen before. I will read. I will read again. For years, something big has been building quietly in the background of the global financial system, not in headlines, not on primetime news, but inside official reports that almost nobody reads. Right now, two of the world's most powerful countries haven't been ranking moves that should make everyone pause. China, Russia, both haven't been doing the same thing at the same time on a massive scale. They've been reducing their exposure to US dollar assets is a speed we never seen before. Thanks.